How employees maneuver around approval limits and circumvent guidelines is a touchy issue. Most don't realize that this maneuvering can be considered fraud. Even if the organization just looks at it as a policy abuse, it can still land employees in hot water. Welcome to Accounts Payable Soundbites, the program where we share tips and explain simple and complex accounts payable issues in short, concise soundbites. Now, companies set up guidelines and approval limits with the idea of controlling spend and controlling actions, and employees are expected to, adhere to them. But sometimes they look for ways to get around it. They don't think of it as fraud. They think about it simply as maneuvering. But be aware, this maneuvering can lead to fraud, and if it's allowed, it is definitely a sign of a weak control. It's a slippery slope. Sometimes something that starts as just maneuvering to get around whatever guidelines it is the employee doesn't like is basically an overt attempt to thwart the controls that your organization has put in place. Either management has, your auditors have, or others. So when you uncover any of these situations that we're going to talk about, there are only 5 of them, you need to make sure that it is addressed with the culprits because it's not okay. Okay? The first one, and we see it all the time, it's when there are multiple payments for the same issue. Now, we don't mean that it's a duplicate payment, but for example, let's say somebody has an approval level of $10,000 and they want to purchase something that's $12,000, maybe consulting services or IT software, whatever it is. It costs more than their approval level. So they will either run 2 card payments through, maybe an $8,000 and a $4,000, or they'll ask the person to send 2 separate invoices, again, an $8,000 and a $4,000, so that it's under the approval level and they can, then approve both of them and get the payment made. Okay? This is not a maneuvering, it's actually fraud because they are spending money that they are not authorized to spend. It's over the limit. Okay, this stuff happens all the time. You'll know what's going on, for example, if you see 2 invoices come in from the same vendor on the same date, you want to take a closer look about that. Unless there's a very special reason, there shouldn't be 2 invoices. Similarly, if you see a few credit card payments go through one right after the other from the same vendor, that can be that game playing. Now, if the employee is smart about it, they'll ask the supplier to run the credit cards on 2 or 3 different days or send the invoices on 2 or 3 different days with different invoice dates, invoice numbers, and due dates, so it's not that easy to find. And of course, the supplier, they just want to get paid. They don't really care about your controls, so they may go along with it. Okay, the next thing that we see sometimes is multiple expense reports within a short period of time. Now, best practice, we tell people, you should tell your employees to file 1 expense report per month. And the reason for the 1 per month is so that it kind of keeps under some control the amount of work that the accounts payable department or the expense reimbursement group has to do looking at expense reports. But sometimes what employees will do is they'll know that anything over X dollars has to be reviewed and a second approval gotten, or a third approval in some cases. And so what they'll do is they'll look to keep their expense reports under that level because they don't want that second set of eyes on their expense reports. So once you start seeing multiple expense reports coming in for a month, or even a shorter time period, you want to look at them, you want to have a talk with that employee, and they need to all go on 1 expense report. And they may come right out and tell you, oh, if I do it that way, I have to run it past John, and you know what a pain he is. Well, too bad. Those are the rules. Okay. Another thing that we'll see sometimes on expense reports, especially when an organization has a requirement that receipts are only required for things more than $25 or more than $75, you'll see multiple supposed cash expenditures right under that level. So the person doesn't have to give a receipt, and then they can explain it any way they want. So let's just say that they spent money on something that wasn't approved, and they'll put it in like that. Or they spent less money. This is really where we see it. They only have to give in a receipt for a meal if it's over $25. So they're tired one night. They just go to McDonald's. They're on a business trip. They get, French fries, Big Mac, and a Coke, and it comes to, I don't know, somewhere between $8 and $10. But they put in an expenditure for $24.50, and that's just free money in their pocket. So that's another way they get around the guidelines. The simple solution to that is to require all receipts. Some organizations will require all receipts over $10, and they just make it so low that it's not worth the game playing. Now, you're listening to me and you're going, oh my God, she's telling us to get all these receipts. More work for us. No, not necessarily. Remember, just because you collect the receipts doesn't mean you have to look at them all. You can spot check. Okay, before I discuss the last true, which focus on attempts to deceive, I'd like to invite you to subscribe. It's free, completely private, and you can unsubscribe at any time. And by ringing that notification bell on YouTube next to the subscribe button, you'll be notified whenever we post new AP content, which we do 2 or 3 times a week. And by the way, you don't need a YouTube account to subscribe. You can subscribe if you have a Gmail account. So let's look at 2 other ways that employees go about circumventing the guidelines. Number 1, they lose receipts. And if this only happens occasionally, like if it happens once a year with an employee, especially if the amount isn't large, you're probably not going to give them a hard time. But it happens over and over again. You want to be suspicious. If they lose the detailed meal receipt, you really should be suspicious, because companies are getting that detailed meal receipt to verify that no liquor was ordered if you have a no liquor policy, which is especially important if you're getting grants. They also use that detailed meal receipt to see how many people were at the meal, also to make sure that no gift cards were ordered along with the meal. So when the receipt is missing, you probably want to make the employee go back and get the receipt. It won't make you popular, but it could be, not necessarily. There are some honest times when people lose the receipts, but it could be that they're just trying to maneuver around whatever your requirement is that they don't wish to comply with. Okay, and so the last one is when an employee pays for something using a payment mechanism other than the one they're supposed to. So, for example, when they put something on a travel card that should be on a P card, or vice versa, or when they put something through petty cash, which if you've heard me talk before, I hate petty cash. But if they put something through petty cash that should be on an expense report. And the reason they're usually doing this is it doesn't meet whatever the requirements are. The big one that we see is when somebody goes out and purchases some technology and they put it on the company P card instead of going through the IT department, who maybe has specific guidelines about what they'll order and what they won't and what everybody's supposed to get. So, for example, everybody maybe is supposed to get an Android phone or a tablet that's Microsoft compliant, and maybe the person decides they want an iPhone or they want an iPad or an Apple product, and they'll go out and they won't buy it through IT, but they'll either put it on their P card or put it on their travel card. So whenever this happens, what you should do is just make sure they get the approvals that they were supposed to get. If it's paid for with a card and the payment's gone, there's not much you can do about it at that point, but you can make them get the right approvals. All righty. In episode 114, we discussed lessons learned from observing Jeff Bezos, the founder of Amazon. On YouTube, a link will appear momentarily to the left. And as always, we always appreciate your comments, your thumbs up, your subscribes, and your shares.